What type of energy is going to power the world in the future? The resounding answer is clean and renewable energy. So should you be invested in them? In this video, I'll talk about how they've been performing and most importantly, where they're gonna go from here. I'm Skylar James, welcome back to the channel. Clean energy stocks and ETFs have a long runway ahead of them, but they aren't even on the runway right this second. Instead, they're stuck in the hangar for a few reasons. Some are political, some are economic. We'll cover the specifics in just a second. But remember what the bull cases are for I-clean and PBW. It's been estimated that renewable energy could completely replace the work of fossil fuels, entirely replace by 2050. That covering just 0.3% of the land with solar panels could completely meet humanity's energy needs. And that in many ways, the main barrier to this renewable energy transition is, surprise, surprise, political. We don't have to look overseas to see the political resistance either. If Joe Biden's Build Back Better legislation fails in the Senate, which is how the projection currently looks, hundreds of billions of dollars set aside for the clean energy transition will vaporize. That's part of what is plaguing clean energy stocks right now, the loss of government subsidies. You can help subsidize this channel by hitting that like button and becoming a subscriber. You would think that rising natural gas and oil prices would have forced a flood of nations to speed up their energy transition, but I haven't seen the pace picking up at all. In fact, what I'm really hearing these days is we don't have the infrastructure for clean energy. We don't have the infrastructure, can't do it. Baloney, build the infrastructure for us. Which is where PBW and I-clean come in. They are filled with stocks of those energy producers and infrastructure suppliers, and near-term political headwinds have dampened their performance. And let's not forget that clean energy as a whole was caught up in a bubble in early 2021. And as far as bubbles go, it was a very crowded bubble. It wasn't just clean energy growing faster than it could sustain. It was ARK ETFs, Chinese equities, SPACs, hyper growth tech, cannabis stocks, and even Bitcoin. Everything was peaking at once. FOMO had gripped the speculative world. Even US existing home inventory was at a 5-year low during this speculative stock bubble of February 2021. The stocks corrected and are still corrected. Bitcoin corrected. Will US real estate prices correct in the coming years too? Time will tell on that one. But all these assets had one common thread. These are the investments in future powerhouses or in the way of life in the future for the US housing. The theme was getting away from shared ventilation and condos and into a bigger single family home with space for a home office, future way of life. With Chinese equities, it was the future biggest economy looking strong coming out of the pandemic. Bitcoin had people calling it to be valued at $500,000 future. On. And clean energy, it was democratic control of the federal government will lead us to clean energy transition. In some cases, these bubbled assets were trading at multiples that don't reflect today's real world value. Clean energy is one of those cases. Maybe US residential housing will prove to be one of those cases as well. Anytime demand outpaces supply, valuations rise. There's another piece to this too. When we buy into assets like these, future-based assets, let's say some that are on the runway, others that are in the hangar, when we buy these assets, we sometimes forget that our future returns become priced in. It's easy to just see the big picture of solar being the future and buying Sunrun stock as a result. But how much of that bright, glittery future is priced in on the day you buy it? Now that's the past. That's what got us to where we are, and where we are is clean energy equities trading around their lowest levels of the year. If you liked PBW at 125 a share, you probably really like it at 75 a share, as the saying goes. Scanning the clean energy ETF landscape, my two preferred ETFs from my first video are still the ones I have the most confidence in. Today, they have very little coverage overlap and offer my portfolio a complete picture of the space. And by complete, I mean efficient and adequate. I don't need to own every stock associated with charging stations or lithium development. Perhaps the most discouraging thing about this sector is the sheer number of new ETFs popping up month after month to cover clean energy. Why is that discouraging? Well, in my original video, I showed you how I narrowed down from something like 10 to 12 ETFs to my 2 eventual champs, I-clean and PBW. Even more clean energy ETFs have hit the market since then. This list from ETF.com shows 17 different ETFs covering the space, but that worries me. How many semiconductor ETFs are there? This list shows 10. But if you rule out the leveraged or inverse ETFs, it's only 6. Just 6 ETFs that cover one of the strongest themes in technology investing. But we have 17 and growing covering the renewable energy sector. To me, that's a big red flag. There's only one reason for this discrepancy. Folks, we've got a money chase on our hands. Money managers see us, they see you and me as willing to buy into the theme without caring about fundamentals. This is now a marketing war for them. Which ETF issuers can lure the most dollars to their ETF? That's the battle, and it's retail investors buying most of these, people making less than $200,000 annually. This could be a sign of a bubble brewing, all these new ETFs hitting the market, but more likely it's just a delayed result of the speculative bubble that popped in February 2021, just like we talked about. During that bubble, I bet the ETF issuers got together in a strategy session and said, let's make more clean energy ETFs. People like to buy those. These ETFs are products for sale after all, just as much as they are investment vehicles. The fact that over 400 new ETFs hit the market in 2021 alone should tell you that somebody out there is making a big profit by issuing them. We don't need 17 and growing clean energy ETFs. What we need is the transition to clean and renewable energy to pick up pace. And we as investors need to just sit tight with our holdings, or even think about when to accumulate some shares of these broad renewable ETFs. I still like PBW and I-clean the most. The future is coming. We just don't know when it will arrive. Thanks for watching, and I'll see you on the next one.